Hello everyone, welcome back to my channel. If you're new here, make sure to subscribe as well as click on the thumbs up button and leave a comment. Bitcoin surpassed $111,000 for the first time, with traders increasingly bullish on the prospects of the original cryptocurrency amid mounting institutional demand and support from Donald Trump's administration. Bitcoin climbed as much as 4% on Thursday to hit a record of $111,000, before paring some of the increase. Smaller tokens also rose in a broad rally, with second-ranked Ether at one point up about 8%. Several other cryptocurrencies have seen similar large gains in recent days. That includes Trump's official meme coins, which have jumped up about 75% in the last month. The president is set to have dinner Thursday with some of the meme coin's biggest investors, a move that's drawn intense criticism from some Democrats who say that Trump is improperly using the power of the presidency to boost his personal wealth. Bitcoin's price increase comes after the crypto industry scored a major win with the U.S. Senate advancing legislation that creates a federal framework to regulate the stablecoins, a fast-growing form of cryptocurrency whose values are often tied to the U.S. dollar. Investors aren't easing off the gas. Bitcoin and Ethereum ETFs just brought in over $1 billion in combined net inflows on a single day, their biggest haul in months. With crypto markets heating back up and institutional interest holding steady, Thursday's surge is a strong signal that traditional investors aren't sitting this rally out. Some of America's biggest banks dropped the ball when it came to Bitcoin. Now they're hoping for another opportunity to dominate the cryptocurrency market, but there's little reason to believe they'll succeed. U.S. banks including JP Morgan Chase, Bank of America and Citigroup are considering whether they should jointly issue a stablecoin, a crypto token which functions like a digital dollar, according to the Wall Street Journal. It would be a sharp about-face for the banking industry, which has generally been slow-moving in crypto. As recently as Monday, JP Morgan CEO said he is not a fan of Bitcoin, even as his bank finally allows trading in the token. Stablecoins appear to provide more fertile ground. They could speed up cross-border payments and should be less volatile than Bitcoin and its peers. The Genius Act recently passed by the Senate is set to offer some regulatory certainty, establishing criteria on financial risk and the need for liquid assets to back stablecoins. However, banks are already far behind a new circle of players who dominate the stablecoin market. The largest two stablecoin issuers are Tether and Circle. Tether shares ownership with major cryptocurrency exchange Bitfinex, while Circle has close ties to leading U.S. exchange Coinbase. They have now been joined by firms including the Trump family's World Liberty Financial, which said in March it would launch its own stablecoin. A cumbersome consortium of banks which is only reluctantly coming round to the idea of cryptos in general is unlikely to make much headway. Even their political connections seem to be left wanting, given just last night President Donald Trump hosted memecoin investors at a private dinner. Bitcoin could hit $250,000 as early as this year with technology giants such as Microsoft and Apple entering the cryptocurrency space, industry veteran and founder of the Cardano blockchain Charles Hoskinson made the statement. Crypto markets have been hammered amid a sell-off of risk assets stoked by U.S. President Donald Trump's reciprocal tariffs on countries across the world. Industry experts remain bullish on Bitcoin, with some predicting that it could hit the $250,000 mark as early as this year. Bitcoin miners, who are not actually extracting anything from the earth, verify transactions by solving extremely difficult cryptographic problems that require powerful computers. In return, they are rewarded with Bitcoin. As the price of Bitcoin has shot up to its current value, ever-increasing amounts of computing power have been needed to win crypto rewards, shutting out smaller miners in favor of large collectives and companies. As well as the mining's energy use has environmental impacts. Bitcoin mining exposes millions of people to harmful air pollution each year, and that 34 Bitcoin mines consumed a third more electricity than the city of LA. According to the Cambridge Bitcoin Electricity Consumption Index, mining globally uses approximately 0.7% of global electricity consumption. This is all for today. Thank you for watching.